Well, Wayne, we're ending the week overall in the red by a few points, up on the day, no cause for panic.
No, look, the market's up about 1% on the day, and it's at, call it 22,400. Now, the peak we saw a couple of weeks back was call it 23,000. So it's not far off that level, and I wouldn't see any reason for panic, although further weakness cannot be ruled out. I mean, we've had a very strong run in the market in a relatively short space of time. I mean, first week in March it was 18,000. Next step was in fact almost 24,000. I'm just having a look at the data here. So it's a very strong run, and you can expect maybe a 1,000 point pullback or a 2,000 point pullback. So it could fall 10%, 8 or 10% without anything actually changing. But the market was strong today. It was strong right across the board. We had quite good gains in the commodity side. Anglo-American and Billiton up about 3%, gold up 2%. The big negative on the resource side obviously was Sasol on the back of that trading update. Now, everyone knew the earnings were coming down, but I don't think to the same extent as what they're guiding.
Right, and it's strange, because Sasol, obviously, on the oil side, they're a price taker, but everywhere else they seem to be, price leaders. They're in these cartels where they're
let's not talk about the cartels, but I think what's caught the market a bit unawares here is that I think two things. Number one, the volume increases are maybe not as good as what people thought in the market. And secondly, the actual refining margins have come down quite dramatically as well. However, you've got to take Sasol's number and a piece of paper and a calculator and a pen, because there are so many funnies, not funny, so many unusual items in here. All the Competition Commission fines overseas and locally, the hedge that they had in place that's now not going to be in over the next time period. So there's a lot of adjustments to make to actually see their underlying earnings. Now, if we assume at the current earnings level, as they've said, lasts for 12 months, it probably won't, because now the oil price is 70, no longer 40. So it's going to look a little bit better. But if you make that assumption, then Sasol's price earnings ratio will be about 9. Now, the market's 11, so it's still at a discount to the market. And I don't think that's a bad rating for what will probably be the trough or the low point in their earnings. I don't think that's a bad rating for low point. So longer term, I wouldn't worry too much about the Sasol share price.
It might even be a bit of an opportunity, because the price took a knock. And
look, it's fallen, It's fallen from 500 odd rand to 280 odd rand. Wow. So I would think so. On the industrial side, very, very good gains basically across the board, but certainly the bigger shares there that did well were SA Breweries up 3% and Richemont also up 2.5%. Telkom, very, very good gain on the day. Their results are out quite soon, up 6% on the day.
Surprising, with the unbundling, people aren't really sure what to expect.
Yeah, but look, we'll see a lot in these results.
Right. And
what we're actually looking for is what's happening in Nigeria, because apparently things are not going too well there, and they've spent a lot of money on that cellular operator in Nigeria, and it doesn't seem particularly positive, unfortunately. But it will be very interesting to see what they come up with. But as you mentioned, a good day on the market.
It's funny to see Telkom struggling in Nigeria when MTN did so well out of it.
Yeah, look, unfortunately, Telkom, you take I don't know how much money they spent on Telkom Media, which is basically worthless. I think they gave that away. I don't think they even sold it.
Yeah, just gave the license away, basically.
And now it looks as though there might also be not problems per se, but an under return or a low return on their investment in Nigeria, and they've put significant amounts into that. But the results will tell us what's going to happen. Overseas markets are up between 0.5%, 1%. We've had fairly good economic data just recently, or more correctly, less bad economic data.
Which is good in these
which is better than bad economic data. I mean, on the employment side, so their markets, although it's still down about 2% for the week, it's certainly also looking a little bit happier today.
Wayne McCurrie is with RMB Asset Management.